Design software platforms and programs are the specialties of Palantir Technologies Incorporated. They build and deploy software platforms for the intelligence community in the United States to assist in counterterrorism investigations and operations. One of the things the company provides is Palantir Gotham. It is a software platform for government operatives in the defense and intelligence sectors. And in today's video, we will showcase some information and everything we know about Palantir stock update with Analyst Reactions. But before we get into it, do me a favor and smash the like, subscribe to the channel, and hit the bell button for notifications whenever a new video is published. In the previous weeks, it was turbulent for stock movement for PLTR. Some clips from Cnbc showed analysts reacting to Palantir's of Q4 results as analysts try to explain the moves that made this week shocking. The stock. During his shortened trading week, Palantir reported earnings before the market closed last week. The stock trended even lower, despite what was believed to be a strong report. And then we had the lockup expiry on Monday, when the stock temporarily weakened to a low of $21.94 for PLTR. At least with many new buyers jumping in, we got a rapid recovery for that drop on Friday. Among those buying in bulk with what was called a flash sale of PLTR was ARK Invest. Analyst Reactions. Here are some of the both good and bad reactions from analysts to the earnings report. And part of the issue was that there was an inaccurate EPS number circulating. They offer good context to how those in charge of big money view the report. Cnbc Market Alert. On Cnbc Market Alert, it is worthy to note that PLTR was one of those companies that have existed for a very long time in private hands before it became public. That is often a situation where equity is spread very widely throughout the company. So you have this idea that there is a wall of potential surprise. On the other hand, the pattern has been that whatever selling often happens in anticipation of the actual lockup expiration date, and the market kind of figures that out. But of course, that stock is up so much since its initial listing that playing with house money there on all sides. Ultimately, there's a concern about the share lockup coming from the IPO that will be settling in here recently. And so we have to get through the lockup, and then I think we secondarily have to get through PLTR scale out. Today, PLTR services about 140 of the largest companies on the planet between governments and commercial. And they have to prove similar to what Tesla did when the car came out, that they can take a very high-priced piece of software in this case and then appeal to the mass market. And that is going to take some time. That is their vision. We think they can scale down, but again, it's going to take several years to go into that model. Corporate is a small part of the business. They struggled there in 2017. They did try to revamp it, break apart their pieces, and so you'd have to buy the whole software package. But Palantir has turned it around, and they're going to be able to sell to corporates. Because right now, this is a government story. The government business did well, but it has a two-engine plane. The government business did well given COVID, and now they're finding new use cases for governments across the globe. The commercial was a weak spot in the quarter, though it did very well for the full year. So ultimately, what happens for commercial going forward is that they are stepping on the gas. They are hiring the triple-digit growth rates, being able to prove not only the largest companies in the world. Their software can also be used by the mass market. And again, that's going to take time. That's their guide. We think they'll be conserved again. They beat the quarter in Q4 relative to where they were at both the top and the bottom line. There was way more profitable, and we thought they solved the world's biggest problems that others can't. And the customer reference checks, support that. Roger Monteforte, CEO of Forte Capital Group. Monteforte thought that we have to dig into these numbers to decipher and understand the quarter and the year end. He added that he strongly disagrees with the headline that the company missed. Because when you look at the numbers and you look at what the company has done year over year, that's $1.1 billion in revenue for 2021, up 47%. The $322 million for 40%, and the company forecasted for QI of 2021, 45% year over year. These are robust numbers as far as the guidance going forward. Indeed, there was an overall disappointment on the street that they didn't raise guidance. They did not lower guidance. PLTR kept that guidance in line at 30%. We have to realize that the company gave a 5-year outlook on revenue, where they put a $4 billion revenue target for 2025. That implies sustained revenue growth of 30% over the next 5 years. But if we take into account the existing contracts that they have at the end of 2020, they already had $2.8 billion in existing contracts. Then you take the revenue growth of 40% in 2020 and do the math. They're in a good position to significantly outperform guidance going forward. This is a 116% increase above consensus, and then it can go further and you strip out from one-time expenses relating to penalties, tiers up the list. They earn 6 cents versus the 2-cent consensus. So we look at this as a big earning beat, and we maintained a very bullish posture of the company. Still, it gets back to that stock move, so it's going to have a lot more. He also believed that the action in the stock is a culmination of a review being priced for perfection. The stock is made a power of the move. Cathie Wood of ARK Invest. Cathie Wood highlighted in a recent interview with Cnbc that if you are short in your focus, you probably don't want to spend too much time investing in Palantir. She believes more and more companies are going to start behaving in this way instead of catering to short-term time horizons and short-sighted shareholders who are much more interested in profits and dividends now or share repurchases. She also added that investing aggressively for going short-term profitability to catch some very big waves out there is not advisable. She was astonished that PLTR's revenues are still 61%. She thinks most people in the innovation space have learned over time that some of the most important innovations in our lifetimes have started in the government, especially in the defense sector and in the intelligence sector. So we think in many ways. Although they won't talk about how, but they're certainly gathering a lot of business, which tells us that they are seeing in the future and investing in the future in ways that companies, governments, increasingly companies are going to need. It's just that we have not been spending enough on innovation. Finally, she pointed out that Palantir's attitude is refreshing. That is exactly how we invest. We want our companies to invest aggressively. We don't want profits now. We want them to invest aggressively because we're moving into many winners. Take most markets. A very good example of that is the autonomous taxi world, and that is why their confidence in Tesla, going back to the largest position in their portfolio, is so high. But regardless, there is plenty publicly available information to get excited about with Palantir's demo day or even their original investor presentation. So overall, ARK increased their ownership of PLTR on lockup day by 129%, with those aforementioned 5.3 million shares and adding Palantir too. On the other hand, there were 8 Wall Street analysts that have issued 12-month target prices for Palantir Technology shares. Their forecasts range from $10 to $40. In the following year, they expect Palantir Technology share price to reach $23.57 on average. This suggests a possible upside of 7.4% from the stock's current price. In the last 12 months, 8 Wall Street research analysts have issuances of buy, hold, and sell ratings for Palantir Technologies. Currently, 2 hold ratings and 2 buy ratings for the stock are there. Wall Street research analysts have a consensus that investors should hold Palantir Technology stock. With his hold rating, investors should maintain any existing positions they have in PLTR, but not buy additional shares or sell existing shares, as analysts believed it indicates. ARK, for example, did some huge buying the day before for ARK. They were reserving the lockup dip for ARK, and they certainly did not miss the conclusion. A lot of recent buyers, a strong quarter behind it, and analysts as bullish as we could hope for them to be. Recently, Palantir Technology saw an increase in short interest in March. A short interest totaling 57,740,000 shares, an increase of 27.2% from the March 15 total of 45,410,000 shares, was recorded as of March 31st. Based on an average daily volume of 84,230,000 shares, the short interest ratio is currently 0.7 days. Approximately 4.3% of the shares of the stock are short sold. And right now, Palantir Technologies has a market capitalization of $39.98 billion. So how do you see about investing with Palantir? Do you agree with the analyst perspective? Let me know your thoughts in the comment section down below. Before leaving, don't forget to like, subscribe, and hit the bell button for notifications on our future content. With that being said, see you in the next one.